Hi everyone, my name is Mary Redmond. I'm talking right now about the New Zealand dollar pair, New Zealand dollar US dollar, and also the New Zealand dollar Japanese yen, and also a couple of other pairs with the New Zealand dollar I'm going to look at this week. The New Zealand dollar US dollar is kind of a tricky pair right now because it's still in a clear upward trend. And it also looks like within that trend there's something of a downward channel, so it looks like we do have a diamond here, which isn't really surprising considering the fact that there's a central bank meeting this week. The RBNZ is going to give their rate outlook. But I think the most important factor for the New Zealand dollar, as well as the most important factor for the Australian dollar and the Canadian, is going to be this break in the S&P from its year-long upward trend. And the fact of the matter is this is a significant break, and what it shows is that fund managers are starting to take profits and liquidate positions to lock in on the profit that they have for the year, which most of them do have because we've had an incredible bull run. And we're also preparing for the end of the quantitative easing from the Fed. So there's been over $600 billion that have been pumped into the global economy in the last 12 months. And some of that has obviously ended up in the stock market. And that cushion of liquidity just is going to end in June. It may end June 12th, or they may extend it a couple of weeks. But for whatever reason, the fund managers know this, and they're going to be very careful right now. It's probably going to be a week or the next few weeks where they're not going to be pushing to buy stocks. They're going to want to lock in on their profits. So this shows a general decline in risk appetite and a move towards more risk aversion. So that would be bearish for the New Zealand dollar. And of course it's probably not a good idea to hold any positions over these central bank decisions because you never know what they're going to say, but also there's a removal of liquidity from the market during that particular time, and even for an hour or so afterwards while the market participants and traders try to sort through what the central banks say and how that's going to affect the market. But if as long as Mr. Bullard isn't exceptionally hawkish, I would favor a downside with the New Zealand dollar this week. And it might be difficult. The dollar, the US dollar, is really having a hard time sustaining an upward trend because the yield outlook is still relatively low, and while we had this slower than expected job growth, there's no question that the Fed's just not going to be raising rates right away, probably not for the end of 2011. So we've also had the ratings agencies come out and threaten to downgrade the US debt, which could be causing some anxiety among some investors, although sometimes it doesn't have any impact at all. I mean, Moody's downgraded Japan's debt. It seemed to have no impact, and despite the downgrades of Greece that came out this week, the euro still rallied. So it's hard to gauge to what degree anyone takes these rating agencies seriously these days. But the New Zealand dollar, US dollar did make a spike up out of its monthly Bollinger Bands, and that's a pretty rare occasion. I mean, that's only happened 1, 2, 3, 5 times really in the last decade. So while it's still in an upward trend, it means that this trend is getting really exaggerated, and there's probably not any real reason why the New Zealand dollar would be exceptionally strong. There was a report that came out a couple of weeks ago that the inflation expectations had been revised slightly higher for 2011 for New Zealand, but in addition, the New Zealand economy is only expected to grow between 1.6 and 1.8% this year. And there are a lot of other factors that are weighing on the global economy. The situation in both Japan and China will probably have a big effect on New Zealand. And anything that slows down global economic growth is probably going to have a major impact on the New Zealand dollar going forward because they're a very small economy. So unlike Australia, which is also an Asian economy, they are big enough and diversified enough that they could probably weather some type of a downturn from China or Japan. But the New Zealand dollar is a little bit more vulnerable to that aspect. And we are seeing signs of global slowing, and not just in the United States from the 1 month of slower job growth, but we've also seen it slowing in some of the peripheral European nations are actually in contractions. We've seen this series of interest rate hikes from the Chinese, which has slowed down their growth to a degree. And we've seen a pullback in the housing market in Australia. And since Australia is the market to which New Zealand exports most of its products, a slowdown in Australia is going to affect them as well. So the New Zealand dollar, US dollar, I wouldn't really be surprised if it spiked up again to 82.50 this week. There's always a chance because there's some US dollar weakness remaining. But I would be inclined to short it on a spike up to the $82 level, provided that Governor Byoa is not exceptionally hawkish. And when you look at the New Zealand dollar, Japanese yen here, this one is already looking as if it's in a downward channel when you look at it on the 4-hour chart. And of course there's a risk with this position that the Bank of Japan is going to intervene or something else to weaken the yen, because the yen has been strong, and it's a possibility that the yen is overdone. But this is primarily a carry trade, and when you see the stock market turning into what possibly could be a bear market, and you see signs of slowing growth, then what that means is that there's going to be some liquidation in the carry trade. And we may have seen that a little bit this week, but not really enough, and these pairs could definitely go lower. So that's what I'm going to look at for this week. I'm looking at a possible short for both of these two positions. And I'm also going to keep an eye on the Euro New Zealand dollar, because if there's a chance that the RBNZ comes out even a little bit more hawkish than expected. And since Governor Byoa in New Zealand, he doesn't really drag it on or pontificate with the way some of these other central bankers do. The market can sometimes overestimate. He might say something like, well, at some point we'll have to raise rates, and all of a sudden people who are trading are going to say they're going to raise rates right away. So there could be some exaggeration. There almost always is with some of these smaller central banks. But if he's a little bit more hawkish or a little bit more upbeat about growth in New Zealand, then I'm going to look for a possible short opportunity with this. It did make a big move up this week. It looks like it's not really in a downward channel anymore. But I'm a little skeptical of the growth in this particular pair going forward. I'm a little skeptical that it's in a true downward trend. So depending on what the RBNZ says this week, I think there are probably going to be some good trading opportunities for the New Zealand dollar.